You are listening to First Metro Securities Philippine Stock Market Weekly podcast, where we feature timely and relevant discussions on the Philippine stock market and the economy in the hope of providing you investing and trading guidance. Here's your host.
You are listening to Philippine Stock Market Weekly's Market Bites, our mini-series which strives to deliver trading and investing analysis built on our research reports. For in-depth information, you may also log in to your FirstMetroSec account and head to the Research tab.
Hi investors, this is Anjz from First Metro Securities, and you're tuned in to Market Bites. In today's episode, we're talking about the renewed market chatter around Jollibee Foods Corp or JFC. Specifically, the rumors about a possible removal from the MSCI Philippine Standard Index. If you've been watching the stock lately and wondering what's going on, this episode is for you. Alright, let's jump right in. Many of you may have noticed that JFC has dropped quite a bit from its Feb 2026 high. And a big reason behind that is the growing concern that it may be removed from the MSCI Philippine Standard Index. Let's break that down. Over the past few months, JFC has underperformed the broader market, with the stock down around 27% from its Feb peak. This happened as investors became more cautious due to higher oil prices and, more importantly, more aware of the technical risks tied to MSCI index membership. Right now, trading in JFC isn't being driven by fundamentals alone. Technical factors like index positioning and potential fund flows are playing a much bigger role in how the stock moves in the near term. So, what's the issue with the MSCI? Based on recent MSCI data from April 17 to April 22, JFC's float-adjusted market capitalization is sitting just slightly above MSCI's global minimum size requirement for staying in the standard index. MSCI will finalize its official cutoff sometime between April 17 and April 30, and we see a higher risk that JFC could be reclassified to the small cap index if certain conditions materialize. Here are the two main scenarios investors should watch out for. First, an absolute size breach. If JFC's share price continues to weaken, its free float adjusted market cap could fall below MSCI's required buffer, triggering an exit. Second, a relative size breach. Even if JFC stock price stays mostly flat, MSCI could raise the global size threshold during the May 2026 review, especially if developed market valuations remain strong. If that happens, JFC could still end up below the recalibrated global threshold. Given these uncertainties, we think it makes sense to pause directional calls on the stock until there's more clarity on JFC's index status. Because of this, we are placing JFC's rating and target price under review as we reassess our forecasts. This includes factoring in changing macro conditions linked to the ongoing Middle East conflict and the outcome of the MSCI May 2026 quarterly index review. It's also worth noting that higher global prices could squeeze household spending power, which may weigh on discretionary spending, like eating out. And if JFC is eventually removed from the MSCI Philippine Standard Index, that could lead to persistent valuation pressure as passive funds reduce exposure and investor visibility declines. Now, in terms of timing, here are the key dates to remember. On May 13 Philippine time, MSCI will announce the results of the May 2026 rebalancing. On June 1, any changes will officially take effect. Of course, there are risks to consider. First, possible MSCI reclassification, which could trigger fund outflows and continued valuation pressure. Second, slower Philippine consumption and a broader global growth slowdown. Third, higher cost inflation. Fourth, execution risks in JFC's international businesses. And fifth, capital allocation risks, including potentially valued destructive acquisitions. If you'd like a deeper dive into all of this, we've published a company report on JFC, which is already available on our platform. Feel free to check that out for more detailed guidance. And with that, we'll wrap up today's episode. We hope this helped clarify what's been driving JFC's recent stock movement and what investors should be watching next. If there are topics or stocks you'd like us to cover in future episodes, just send us a message on our socials and we'd love to hear from you. You can find First Metro Securities on Facebook, Instagram, and YouTube, and at FirstMetroSec on TikTok. Thanks for tuning in, and we'll see you on the next episode of Market Bites.
Thanks for listening to First Metro Securities Philippine Stock Market Weekly podcast. Don't forget to follow us to get first dibs on our new episodes. For more up-to-date market news and info, exclusive content, and the opportunity to connect with your fellow Filipino investors and traders, join facebook.com/groups/FirstMetroSec and be part of the First MetroSec family.
The views and opinions expressed by the podcast creators, hosts, and guests do not necessarily reflect the official policy and position of Podcast Network Asia, the hosts of the program, or other programs of the network. Any content provided by the people on the podcast are of their own opinion and are not intended to malign any religion, ethnic group, club, organization, company, individual, or anyone or anything.